Hello, everybody, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. My guest today is Chris Faulkner, CEO of Breitling Energy. Chris, thanks very much for coming back on the show.
Thank you, Mike.
So let's discuss what is your outlook now. We see a lot of, I guess you'd say, geopolitical turbulence hitting the market. We see crude trading WTI at around 110. What do you make of it?
Well, I think, Mike, it's an 18-month high at 110, and we've had a lot of volatility that's created these tailwinds for oil. We've got the current issue in Syria, what's going to happen there. I think we've got probably $8 built into the price for Syria. We saw some pullback just recently because I think that now folks think a strike is not imminent, but may still occur. So we're going to see a little bit of pullback, but not down to 100. But I think more importantly, Libya has been a bigger concern. Libya was moving up as far as their production numbers, renormalizing after the ouster of Gaddafi.
That snapped back nicely.
And now it's pulling back again. We're down to 300,000 barrels a day out of Libya. Normally we're doing 1.6 million, so literally a very small amount.
Why is that? Why did that happen?
What we've seen recently is the security guards and the security personnel for the oil infrastructure in Libya has gone on strike.
Really?
So we're seeing traders saying, well, maybe these oil assets could be attacked. Production has been pulled back, and so Libya now is a major event. I think right now it's a major event, even more so than Syria as far as impacting on oil prices. And so we're going to have to watch carefully what happens there. But if Syria gets back on the map and a strike occurs, it's not about, if Syria gets, blown up or taken off the map, if you will, it doesn't affect oil because they're not an exporter and they're not even a big, producer of oil. But what it does affect is things like Iraq could be a part of the picture, Russia, Iran. You've got Hezbollah, which is a Lebanese fighter group that kind of Iran backs, and they've been involved in the fight in Syria. What if they were to retaliate and attack Turkey or to attack Iraq? There's a lot of oil coming out of there. If it spills into the Middle East, where a third of our oil production comes from, we could see, prices of oil go from where they are today at 108 or 110 and touch 150 or beyond, and that would be the record from 2008. Yeah. We saw 147 in 2008. We could be there again if anything starts to actually materialize.
But, and I hear all this, and they're all great arguments, bullish arguments, obviously, but on the flip side of this, we hear about this expanding production in the United States. Very, very significant amount of new production. In fact, we're being called the next new Saudi Arabia.
Yeah.
I mean, think about it for a second. If somebody just a few years ago had come along and said, hey, there's going to be a discovery the size of another Saudi Arabia, I mean, oil markets would have tanked. They would have collapsed. But we don't see that happening.
You're right.
And why is that?
I think you're right. Number one, we're producing 7.5 million barrels of oil a day. It's huge, up 20% from just a year ago. So we're making massive, massive stride to becoming Saudi America, right? So the biggest oil producer in the world if we get to 10 million. The market is well supplied in oil, and I agree with you. And demand is down because of efficiencies with cars and in the global economy issues
that's
that we have.
That's a big thing, too, and that's long term. That's secular.
It's reduced us by 5 or 6 million barrels a day off of our peak, that combined with the economic conditions that we have. But I think that, Saudi Arabia has pulled back their production. They're producing now less than 10 million barrels a day down to 13. They wanted to go to 15, but can't because we're pushing so much oil into the market. They're trying to stabilize the price. Saudi has said they like $100 oil. It's not because they like it. If you dig down a little bit deeper, why do they like it? Their budget numbers are based or were based on $83 oil to pay all their social programs and subsidies in the Middle East. But because they bailed out all these countries after the Arab Spring, they're now saying the money they've spent, they need $100 oil, $101 oil to be exact, to pay for their budget that they currently have going. So they're concerned that oil prices begin to drop, that they can't pay their bills over there. So they're going to have to be aware that they have to pull their production down because they know America will continue pushing as much oil as we can, and that's just the way things are because of our big supplies and big new reserves over here, right? But I think what we've seen in the last whole year, I think really is attributed to geopolitical concerns, tension, and fear. I don't think it's down to basics and fundamentals. I think we're talking about not fear-mongering, but in a way, the markets react on uncertainty. There's been a tremendous amount of that this entire year.
The Saudi Arabia story, I think, is very, very important, and I think it's something that most people forget, is that really they're still sort of the price setters at the margin because they have the excess capacity. And we always hear this, like, drill, drill, drill. That's been the mantra, or, there's been at least a faction or a group here in the United United States politically who proposed that. But they don't understand that the OPEC or the Saudis could offset whatever new production we bring on by cutting back their own. And in fact, if you look at the last 40 years, you've had non-OPEC production grow something like 400%. And OPEC production come down around 5 or 10%. So they've offset a lot of the new production from non-OPEC, and that's why prices keep going up.
That's correct. And you've got, two things are occurring right now in the world, on this planet. We use 88 million barrels of oil a day, right? Every model we've looked at in forecasts, even from the EIA and the other IEA over internationally, look at about 110 million barrels a day of usage by 2035. The numbers are going up, right? Supplies in the Middle East, though, are starting to come down. They have a lot of conventional assets that are in heavy decline, right? We have unconventional assets which we're finding by the boatload. So I think the oil puzzle is definitely starting to shift. If you watch the OPEC meeting that we just had a couple months back, the Saudi energy minister, when they started talking about fracking in Shell, he got angry and started talking in Arabic and refused to continue the conversation because they're touching a nerve with these folks, right? Because they're saying, look, fracking has allowed the United States to become a major player, a powerhouse in oil and gas. We have 100 years of natural gas, and if we keep going down this road, Mike, we'll be supplying our own needs at 10.5, 13 million barrels here by 2020 or 2025. I think it concerns Saudi Arabia, more importantly, like Qatar, when they were going to produce all the natural gas we needed, and they built those terminals to send gas over here through liquefaction. We said, hey, we don't need it anymore. Within 5 years, we found so much gas, but in 2005 to 2010, we don't need your gas. They sent that gas over to Asia, and specifically China. But now we're going to China with our technology, horizontal drilling and fracking, and teaching China how to do it. So now they're saying, well, hey, hold on a minute, China's our new customer. Then here comes America again saying, okay, China, if you start using these tools and techniques, you can produce your own gas from natural gas there in your domestic shale gas fields. And so Qatar said, hold on a minute, we don't want that to happen. So it was interesting this summer, you might have heard of a movie that came out called Promised Land with Matt Damon, a Hollywood movie. Right. It was about kind of an anti-fracking theme, right? Well,
it's out of Hollywood.
Right, so it's all made up. Abu Dhabi, Image Nation Abu Dhabi financed 60% of that film, so the Middle East paid to produce a majority of that film and had a very anti-fracking narrative to it. So I think what it shows is the Middle East is concerned, and just recently the Saudi prince came out and said, look, we're deathly afraid of North Dakota. They said this out of Saudi Arabia. I don't even know where they knew North Dakota was over there, right? But they're concerned that the Bakken Shale is surging continually with new oil production, and they're worried, look, America is becoming an oil island. They're not going to need to be our customer anymore. But more importantly, what if they become self-sufficient and independent and can start exporting crude oil? They can start being a competitor to the Middle Eastern oil. And I think that's where some of the concern lies.
That's incredible. And earlier you alluded or you touched upon, the new technologies, the shifts into electric vehicles. I mean, this is not going to be rolled back. I mean, this is here to stay, right?
Absolutely.
So what does that portend for the long term? What's the outlook then for oil? When we've been hearing for so long about the peak oil situation, we may be in a period where oil can enter into a long-term decline. Is that possible?
I think with the current supplies that we have today and our production numbers, where we're at 7.5 million, more importantly, the resources that we have, we've got the Bakken, the Eagle Ford, the Monterey, which is being discussed out in California. It could be 5 times bigger than the Bakken. Wow. The new field in Siberia that they found that's shale-driven, it's liquids, it's oil. They're talking about 10, 15, 20 times bigger than the Bakken. So planet-wise, we've got a ton of new oil reserves. I think the idea of peak oil is out the window. Even though it's been recycled so many times. And I think commodity-wise, we're dealing with $100+ or average commodity. Oil may pull back and go into the 90s, and it may go into the 110s. But overall, I think we're dealing with a $95 to $100 commodity going forward. And oil will continue to rise over the next 10, 20, 30, 40 years because just look at India, Latin America, China. These GDPs and these demand pulls from those countries, just those alone, and the population growth we're seeing on the planet. It took us 35 years to get from where we were at like 3.5 to 4 billion to 7 billion. It's going to take us 15 or 20 to get to 9 billion from 7. So we're moving at a very, very rapid pace, and that's why I look at those EIA numbers saying we're using 88 million today, going to 110 million every single day. That's 22 million barrels a day of new oil we have to find just to keep up.
Wow, great stuff, Chris. Always a pleasure having you.
Thank you, Mike.
Thanks very much. That's it for now, folks. This is Mike Norman saying see you next time. Bye-bye.